Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 12th. Good to be with you guys here this morning. Gary, Graham, Eileen, always a pleasure. Farouk, Mario, great to see you guys here. So, it was kind of a lackluster session overnight. We got sort of a snooze session on some of these trades, but the Aussie data really making some waves here. So you got Aussie employment numbers. I included it in the report here yesterday. You can see them stronger across the board. Specifically, you had upward revisions to the full-time and part-time employment loss in full-time, gain in part-time. You saw both of those upwardly revised. And obviously the blowout number, 58,000 versus an expected 15. You saw unemployment drop unexpectedly by 0.3 percentage points to 5.9%. The result obviously fueled a massive rally in the Aussie. So we took a minute yesterday. We just wanted to sort of zoom in and hone in on some of these Aussie trades. We'll be going over those. And obviously, we'll take a look at some of the cross pairs we've been following as well. Specifically, Euro Yen, Aussie Yen, Sterling Yen, some of the Yen pairs in general in focus here. As always, questions, trade setup. Jency, great to see you. Hi. Feel free to throw them on the message board, guys, throughout any course of the webinar. Okay, let's jump right in. Quick look at relative performance for the greenback before we jump to the metrics here. You can see that the dollar is still strong against most of its major counterparts today. The Aussie, obviously, beset by some of those things that we talked about earlier, but Kiwi down 0.59%. CAD, again, turning around and making a run at the highs. That's down 0.37%. Sterling down 0.18%. Euro and Yen pretty quiet here to start off the session in the United States. As far as the economic docket was concerned, here's the data prints. You got CPI out of Germany, which came out right in line with expectations across the board, so that wasn't an issue. Industrial production numbers out of the Eurozone was the other event risk, slightly weaker than expected, okay, on the month-on-month. Year-on-year coming out slightly stronger than expected. Either way, you saw upward revisions to the previous month, so that helped a little bit as well. Into the United States, we just got the release of jobless claims. And those coming out a little bit higher. So here's what the dollar looks like on the index. The only major event risk, by the way, guys, for the remainder of the week, you're basically looking at those GDP numbers for the Eurozone tomorrow. Third quarter advanced print GDP is supposed to come in at 0.4%, 1.7% on the year-on-year. And then U.S. retail sales will also be the major print tomorrow morning. We are expecting a nice rebound from those dismal numbers we saw last month. So keep that in mind for the dollar crosses and for the euro crosses heading into the close of the week. A quick look at the dollar index. And here's what we're looking at. Yeah, I haven't posted this chart too many times this week, guys. There's really not much to focus on here. The only thing that we noted was a sliding parallel of the operative slope. So if you take this slope that we've been following for a couple of months, a couple of years, spans back to last year, continues to guide price action pretty well. You saw that that slope defined support off of the lows from May. And that same slope here, catching the highs from August, looks like it's just capping the advance near term. You could get a little bit deeper of a pullback, like we said yesterday. Nothing's changed. The near-term bullish invalidation level remains at that high day close from April. That's 12,123. And really, it's a break below 12,009 would be required to shift the focus lower. That being said, a topside break, you're still looking for that parallel again. And then the measured 200% extension of the range break. And a nice 1618 takes you into these targets up here. Quick reminder, there are some new guys here in the room. Feel free to take a snapshot of any of the charts that you see by clicking on the camera button in the top right-hand corner of the GoToWebinar screen. All right, the 30-minute chart hasn't really been having anything inspiring here, so I haven't been publishing this one either, guys. Here's what it looks like from the start of the week. Doesn't have the cleanest structure of any kind that I've been able to sort of note, but does look like we're making a little bit of a turn lower. Risk remains for a drop into that 12,123 level. So that is the dollar index. And again, although we can't trade that stateside, can be a great help in just helping us sort of gauge base dollar movements. Heading to the report from yesterday, let's jump into some of those scalps. Euro Yen was the first one that's on tap. That made it through the first target. We saw a quick turnaround there. Check in the lows again, but Euro Yen, you really can't stress how critical this support structure is. Avery with a question here saying, when and how do you fade a move? Was the Aussie dollar short trigger due to an Aussie employment? One of the themes. Thanks. I'm not sure what you meant by the second part. So we'll go over Aussie in just a moment, Avery. Stick with me. It's actually from yesterday's piece. We'll go over that in a moment. First things first, here's what Euro Yen looks like on the daily. And we'll talk about fading too, Avery. It's, you know, a lot of people have misconceptions that you just see the rally and as soon as you see it, you just fade it. It doesn't quite always work that way. I mean, you'll catch a few, but there still needs to be some technical factors that you look for to suggest that it's an exhaustion blow off. So we'll go over that in a moment. But first things first, I just want to touch real quick on Aussie or Euro Yen. Such a critical barrier. I put a piece on this yesterday on Daily FX as well, highlighting this major critical support zone. It essentially extends into 131.20. I think this is what, if I'm not mistaken, the swing trades are trading against, meaning that their stop, is right below that. But this is a big, big region. You're looking at a 618 retracement from the advance off of the April lows. You're looking for 100% extension of decline off the June high. Lower median line parallel for the longer term formation off the yearly lows, and current operative descending formation off the highs. So this is a modified pitchfork when it just essentially uses this slope of trendline resistance to derive these slopes. And if you do that, they all coincide right here. So even though it came and collapsed right back into support, you know, it's still at a major critical support, and we definitely would need to get below that to make any progress on the short side. So I'm still looking higher, still looking for long triggers here. Raj has an interesting question. He says, don't you think everyone knows about that support, hence they will take people out before moving up? Very possible, sure. Raj, that's why we're so focused on the near term. But for me, it's the closes, so it doesn't really matter if it spikes into their intraday. It might give us a great opportunity to get long. And you don't really want to think like that because A, not everyone does know that there's support there, Raj. That's a big assumption. Or at least not how critical that support is. And B, you know, if you start thinking like that, then every single support or resistance barrier you look at, self-fulfilling prophecy, right? Yeah, Raj, in my humble opinion, absolutely. He says, so if it spikes down and then closes up, do we buy more? If this thing spikes sub 131.23 and closes back above 131.80, yeah, that would be a really strong tell that there's some very, very strong bids down there. So from a scalping perspective, if it breaks below that, closes back above 131.80, we'd be looking to buy dips again. Absolutely. You know, those are strong tells. Here's an example, Raj. Just look at price action. Don't take my word for anything. You know, look at price action, make sure it makes sense to you. That's the only way you'll be able to function or to utilize it more appropriately in your own trades. Look at this long wick here. This is in the face of a massive rally. Do I want to fade this? No, hell no. I don't know if this is going to keep going into the moon. There was a major key 618 retracement. We broke through it. We pulled back and closed well below it. The next couple of days, we did it again. And in fact, on the 9th of June, we blew through it one last time, closed lower again, and that was the onset of the decline. You're doing the same thing on the flip side here. So I'm not saying, guys, it's 100% going to rally. I'm just saying that it hasn't invalidated anything yet. All right? Yeah, Raj, you and me both, man. But that's the market that you're in, so we need to learn how to adapt. Raj just saying, no, I find it annoying that, you know, the trade goes all well, and then some muppet comes out and says something, and it drops 100 pips. It's just quite hard trading this year. Listen, it's the market that we're in, and it's very central bank centric. Okay, there's a lot of focus on what these guys are doing. He says, but oh well, you're right. Exactly. We'll get through it. You know, this is a little bit of a perversion of the market, to my humble opinion, again, just because of the such focus that we have on every single comment. But the levels are still our guidance, right? All they can do, guys, is these comments can interrupt the trade. They can trigger a near-term correction against a major bias. They can offer some really volatile intraday price action. But at the end of the day, no one comment's going to shift the broader trend, which is why our focus has been and will always remain, price action. All right, so that's the euro yen on the daily chart. Just keep that in focus. Here's what it looks like on the intraday. Still very clean in my humble opinion. Nothing's been really messed with. If we're looking at these basic slopes off the last couple of weeks' lows, we're still holding those rather well. If you look at yesterday's setup, here's what we talked about on the scalp. There was the break of basic support. Initial target we're up at that 132.40 level. Got a little bit through it. Again, the failure and break below puts us right back at support. And here we are again. This is the major key support zone. For me, not interested in playing the short side unless we break below 131.20. Okay, I'd much rather be trying to find long triggers off the low. Why? Because if this thing does what what the technical suggests may happen, then you're very well positioned for a much larger extension rally. So patience pays, Raj, in this kind of market, man. No worries. The market will provide more and more opportunities. Raj says, Mike, when you get a chance, can you take a look? Yeah, okay, we'll take a look at any cross pairs. Let me write that down, Raj, and we'll take a gander at the end. I do have a long list of stuff I want to go over today, so let's jump right in. Okay, sorry, just keep reading through some of your questions here. Okay, so any questions on sterling, or excuse me, euro yen? The levels remain the same. We've been we came right back into both targets that we talked about yesterday. We're still holding that key range. Risk is to the top side while above. Really, I like triggers above 31.80. 31.20 would need to invalidate the long side. So as long as we hold this region of support, we'll continue to favor the longs here on euro yen. Next up on tap from yesterday was the Aussie figures and the subsequent pairs that we were looking at post that release. So one of the major ones that we haven't talked about earlier this week, we highlighted this on the radar charts last week, was the Euro Aus, and that was sort of a major quick sudden break. Here's what Euro Aus looks like on the daily. Oops. And this is why the risk yesterday was for a little bit more substantiated pullback. There was the initial break last night below 51.30, and that was really the major level. The opening range low for the week was higher, and I'll show you that in a moment. But 51.30 was a big pivot. It was basically the opening range low for the month. It's the 50% retracement of the advance off of the April lows, and a beautiful confluence rests just lower. So this is a 200% extension of this range. Okay, if this is a range break or double top, whatever you want to call it, a conservative measurement is the range from just the September stretch rather, and that takes you into 49.50. That happens to coincide with median line support and the current descending support structure off the highs. So nice area that you expect to see some rebound. We're getting that. We got it just ahead of that target. 49.91 was a soft target that we noted on the scalp chart. I'll show you that in a moment. But the major pivotal region, if we do break this to the downside, is here, longer dated. 618 retracement. This is a multi-year 38.2. Excuse me, and that coincides with not only this pivot region in price, but also the 200-day moving average. So the levels are pretty clear. To get back on the bullish side, you'd need to get back above that median line off the high. Whoops. And that comes in basically just above this week's opening range high. Here's what the scalp looked like last night. Here's what it looks like now. So Near-term support that we were sitting at when we published this was 50.60. We actually weren't there just yet, but the decline, here's the Aussie print, really strong Aussie data, slams Euro Aussie down, nice 1618 extension just off of this week's range. And then you also had a swing low there at, what was it, 50.69, or a swing high rather. This is from the July highs. So we broke it. Soft target at 49.91. Let me go back real quick. Sorry about that. A little lag here. There's that soft target at 49.91. Still was looking for a stretch into 49.50 on the rest of it, but just didn't get it. So we sat here. This turned out to be the opening range low for, or the opening range high, rather. The same region turned out to be the opening range high for Europe, excuse me. So on this break right here, I still do think you have the risk to rally back into 51.30. And if we do break there, I kind of don't want to touch this, but I'm looking for short triggers into this region. All right. And that's just a basic slope line. If you take the same slope of just the resistance on the way down, extend it to that Thursday high, you can see that caught. A pivot there again would take you into a 50% retracement. So I don't want to get too aggressive on the euro shorts because, again, where euro dollar is, and we'll talk about that later in the session, where euro dollar is, but where some of the euro crosses, euro yen, it does give us some caution, right? I don't want to get too aggressive on a short side for the euro at this juncture, but as it pertains here to the euro Aus, near-term bearish invalidation is still going to be 51.32. And then the targets to the downside will be the same. You'd be looking for a move back into 50.60, back into 49.90. This is the major key support guy that you want to look for, 49.36, 49.50. Any questions on Euro Aus from last night? Also, keep in mind when you see these stretches, right, when you want to know when to fade them, if the market slams in one direction and within that hour you don't get a material pullback and you see a candle close like this on a 30-minute or on an hourly chart, you know, those are ones that I won't typically get too aggressive on trying to play the fade. Not only that, excuse me, the best opportunity to fade a trade like this is when the trade is traveling into resistance or into support, and then the data causes the extra stretch to tag a major key level. So if the market was already, for example, drifting lower, you got that break drifting into a major key support, that's like a beautiful rebound type of play. That's when you want to try to fade it. But I don't think you're at a region like that for Euro Aus just yet. I would love to have played a rebound or a fade type of play from down here. We'll see if we can get there today in US trade. Keep in mind that resistance trigger and momentum still holding like a charm. Okay, and if we do break sub 40, this is going to be the first sub 40 break we've seen since March. So some food for thought there on Euro Aus. This is really make or break now. Okay, so that's Euro Yen, Euro Aus. Next up on tap is the Aussie Kiwi. Okay, this was the Aussie Kiwi chart from last night. And we were talking about the major key resistance that you run into if you break higher into 109.20, 109.35, really big. You got the low day close for July. You got a larger 50% retracement just to the decline. There is a 236 here at 109.10. I don't want to stress that. That's, again, multi-year retracement, but we've gone through that a couple of times. So the focus is really this range right here from 109.10, let's say, went to 109.35. That's really what we're testing right now. We broke above the sliding parallel extending off that late high from August. And again, this would validate technically a break of the initial monthly opening range high, but we need to close here. Okay, so you could get some kickback here. We warned about that last night. Larger story still remains constructive at this point for the Euro Aus. Here's what it looks like on the intraday chart. And here's what we looked like last night. So we just made that break. This I thought was going to be a bigger one. And if you look at the intraday update from the 10th, I think I linked it for you there. You have that as the bearish invalidation level. So as long as we hold above that, you want to stay constructive at this point. 108.45, next resistance right here at 109.20 into 109.35, and that's kind of where we're basically capping out the advance at this point. So you could see some pullback off this region. Wouldn't be surprised to come back and check that upper median line parallel support before we rally again. But broadly speaking, you know, this thing has made some serious advances over the last couple of weeks. And not only that, the behavior of the advance, certainly something to pay attention to, right? Off of the lows, this is your first break into above 70 territory in weeks on the pullback, struggling to hold that 40 level, but more or less you've held it. And here we are again at extreme highs above 70 momentum we haven't seen. So if you take it back to the daily chart, very similar type of change in behavior. You've seen multiple breaks into oversold. We were sitting there for the majority of last month, came up through a couple of different triggers, right? And then this is your break back above 50 for the first time since the September rally. So long story short, you're at resistance at this point. I'd be looking for a pullback to get a little bit more aggressively on the long side. It's likely to be, a nasty, slow pullback like this, but I still do like it. So depending on where we end up into the close of this week, might not get another opportunity for the long, but I'll be looking for those triggers. In fact, right now, it looks like there's a support trigger that could give out right around here. Mark, we haven't talked about sterling dollar rather yet. We will. Christopher says Aussie Kiwi starting to look more and more like it would hold a 50 back in a 4-hour. Really thought it would be a better sell. So be careful, Chris, about trying to fight the trend, especially using indicators on longer term time frames. I'm all about multi-time frame analysis. It's sort of the cornerstone of my analysis over the years. But when you're looking to fight a rally, and when you're looking to fade a rally, looking at those kinds of things could be kind of misleading. So just keep that in mind. You are coming up on that retracement. Make sure you get a little bit better of an entry. And I want to see that momentum turn over a little bit more aggressively on the near-term time frames, which is why we look at this. And it does look like it's turning over. You might be in for a decent short scalp if you get the U.S. Open pushing into this high again, failing, then breaking this trigger. That would actually be a really nice scalp to the downside. You'd be looking for initial targets right back the same levels that we just noted. So these targets are unchanged, guys. If you want the whole breakdown, it's the link is there for you for the previous scalp report as well. The levels are unchanged here, but broadly looking higher while within the scope of this formation and while above this median line. Don't forget, and I want to go over this every day, but the slope that has defined this pair so well for a couple of years now. Keep that in focus. I guess it's easier to see it on the daily chart. All the same slope. Christopher says, that's my point. Not really good at expressing myself until I finish a few cups of coffee. No worries. You and me both, man. I'm sure you recognize that by now, he says. No worries, Chris. You're in the right place, man. All right. So that's Kiwi, Aussie Kiwi. Look for, a pullback here. Again, if we get a rally or another attempt at that 50% retracement and it holds, it might be a decent short position. Inevitably, we'd be looking to buy that pullback in Aussie Kiwi. Next up on tap from yesterday, we're doing pretty decent on time here. Euro, Yen, Euro, Aussie Kiwi, Aussie dollar. And this was just a quick update. I haven't taken anything on this because I'm not really too keen with trying to fade the dollar per se at this point, but it's definitely something you wanted to keep in mind just because the level is kind of just screaming at you right there. Excuse me. A real nice confluence, guys, of just some basic median lines. I mean, you didn't even have a major retracement or anything there. Here's what the daily chart looked like last night. We were right up into it. In fact, on the back of the rally, right as soon as this print, I did tweet the 30-minute showing that confluence. So you're looking at a basic trendline support from the high they made on October 15th. And then you're looking at a longer-term sliding parallel of the same operative slope for the structure that's held this for over a year. Right? Add to that, if those two weren't enough, basic trendline support, which is again a parallel off the resistance, now resistance. And all of them came in right around 71.40 or so. I think the high stretch was near 71.50. So just wanted to highlight that resistance before everyone starts getting excessively bullish. You do also have that trigger break in momentum. Remember, this doesn't matter for Jack until we have today's close. So it's going to be important to see today's close, maintain that above the trigger line there for the Aussie. Here's what it looks like on the intraday chart from yesterday. And again, that's basically where this thing capped out. All right. Gosh, I missed the trigger. Anyway, here's the resistance level again. Even on the near-term approach, guys, it was a pretty clear to be cautionary here as they came into that rally. So the pullback hit the initial support we talked about last night, 71.06. The bullish, invalidation level isn't until down here. What is 70.77? It is just the weekly opening range high that was invalidated on this break. Also coincides with basic trendline support off of the weekly lows here. So that's going to be the level that would invalidate the long side. If we do come into this region, I'd be looking for some long triggers. Aussie is another one of those trades like Aussie Kiwi, not as convincing, but certainly that we're seeing a change in behavior. The break above 60 was the first break above 60 that you've seen since April. On the pullback, here's a turn ahead of 40. And if we get that trigger break, that's a change in behavior, right? So just something to keep in mind here for the Aussie. Of the four that we were talking about yesterday, actually, this is kind of the one I've been most reluctant to touch. On the 5-minute, though, I can tell you right ahead of the webinar, I was looking at this. Nice little trigger there. Came back up, tested it as resistance, and then that break was a break of the European opening range low. So this actually was a really good trigger here from 71.30 or 71.27. You're only looking for about 19 pips, so make sure that we're keeping our profits nimble here on the Aussie. For the breakout, you'd really need to clear this region here, the 72 handle, and you can see that on the intraday charts as well. Basic 50% of the decline. Any questions on Aussie dollar? Mike, what do you think of this Aussie trade setup? Short against test of the highs with divergence in the 30-minute, target 70.85. I like the target at 70.85. Short against a test of the highs with divergence in 30 minutes. You're saying in that scenario, Chris? That would be awesome. Yeah, I'm right there with you. especially if we respect the former. I mean, the fact that all these trend lines confluence here is the strongest summation as it was heading there yesterday. But now that you've moved over in time, as long as you stay below that, you don't want to get too aggressive on the longs just yet. So if we come back and test that trend line again, remember basic support, tested as resistance and failure, could be what's happening. But if we come here and fail, we get a short trigger and momentum, might be a decent short. I wouldn't necessarily be looking for a stretch all the way down into 70.85 at that point. I'd just be looking for the 71 handle, or even the basic trendline resistance off the high there. Because remember, Chris, markets have this opening range strategy that we work with. The opening range broke to the upside. You expect to see a late Thursday, Friday high. So not only that, momentum has made obviously a major break into overbought territory. You'd expect to see this pullback find some support at 40. If that happens and you get that test that you're talking about, well, that's still constructive. So while I do think you can play a rebound for 20 pips, sure, I wouldn't be looking for a stretch all the way down into the opening range high again. All right, something might be afoot here for the Aussie. So keep that in mind. And remember, as always, guys, when we're counter trend trading, whether it's on a weekly basis or on an intraday basis, you want to be a little bit more prudent with your leverage. So if I'm trading X size on per scalp on average, it'll be half X or a third of X, just to make sure that counter trend trading can be a little bit more riskier. But for the week, the opening range popped to the upside, so you want to respect that. Okay. If anything, Chris, that trade setup that you're noting to me right now, with a short divergence stop against the highs, looking for 70.85, would have been the play heading into Europe. That would have been the awesome play because you're testing that major key support confluence or resistance confluence rather, and you're on a violent upstretch off of a trade. That would have been the best entry. And I know looking at it hindsight, obviously, yeah, thanks, Mike, right? But I'm just saying, once you've made the correction this low, if we do find that support, we're likely to just keep dropping. A rally here could go right through the highs. All right. He says, I agree. I can't believe I missed it. I wasn't watching it at the time. You and me both, man. I mean, I even had the trigger drawn. I can't get it closer than that. But it happens. It happens. The cleanest thing that I woke up this morning and I was like, wow, is that the opening range for Europe was ridiculous. This was the opening range low for Europe. The opening range high for Europe was the same as the high for Asia. So that's like an ideal setup. So I had my trigger. I sat there, took a shower, headed out. Time I got to the office, here we are. So it happens. You'll get these setups over and over again. No worries. No worries. Chris says an emphatic me too. Farouk, great to see you in the room, says, do you move your stops to break even at a certain number of pips from entry or until the first target is hit? So it depends on the trade, Farouk. If I'm looking to fade a move, typically as soon as I start getting 3/4 of the way through my first target, I'll just bring it to break even based on what momentum's doing. If I'm trading on a normal basis, it's as I take the first profit target. So if I'm looking for 19 pips, as soon as I close out 19 pips, bring the stops to break even. Next target down, and so forth, Farouk. But, you got to finesse the levels, guys. I wish there was a blueprint I can write A, B, C, D, and just give it to you. It's not. Every trade needs to be taken on its own merits. So sometimes as we get into a position, Farouk, you'll be able to identify, like a near-term slope. So if I identify a near-term slope, oh, okay, we're in the trade. We're looking for this level. Cool. My stop was right here. I'm going to bring it to right above this median line because if that breaks, probably don't want to be in the trade anymore. You know what I mean? Or let's say you've identified a near-term trigger. And you say, hey, you know what? If this trigger gives out momentum, I don't want to be part of this anymore. Plan accordingly with your stops. So be dynamic with what's happening in price action. I don't want you guys to be watching a 1-minute chart the entire time you're in the position, but as far as your stops are concerned, once you're in the money and once you've taken off a little bit of the trade, it's always prudent to go ahead and cover yourself. Remember, in near-term trading strategies, risk management is paramount. Okay? More important than even sometimes how big your gains are, how small your losses are. So we want to make sure that we're using that that caution. So I hope that helps, Farouk. Let me know if you have any specific questions beyond that. He says already closed. Oh, I missed your first comment here. He says already closed a tiny fade position on Aussie with profit, quarter of a position still open. Farouk, that's the exact way you want to play it, my man. Now, as you head into the U.S. trade session, I would be cautious because, again, U.S. markets haven't had time to react to any of this. Come back online. We'll see if we can get another run here towards that resistance level. But it's exactly how you want to play it. It's exactly how you want to play it. But you guys get a picture of how it looked on the 5-minute. And again, talk about earlier in the session, who was that? Was that you, Avery? Earlier in the session talking about the Aussie. To clarify, does the Aussie shooting higher due to better than expected employment data qualify as a fade opportunity? Oh, that's the question. So for me, I don't really care, Avery. I don't really care what's causing the move. I don't care if it's a central bank comment or if it's a data print. It's price action is what's going to dictate everything and what we decide. So all I can tell you was the move was fueled or was sparked by strong employment data. Absolutely. That's without regard, right? That's a pretty close statement. But the fact that the rally came into resistance and held had us on the sidelines looking for short triggers. Now, again, I'm not going to just jump into the trade blindly. Because if you start doing that, I would have done that at this resistance. I would have done it at this resistance. I would have done it at this resistance. And it's a quick way to make a big mess of things. So that's why once we rallied up into there, you didn't really have any short triggers. You saw a break below 70, but we were way overstretched, and I still wasn't going to try to fade that. So I was looking for an opening range break of Europe. Europe opening high was the same as the Tokyo high. It was the same as the Sydney highs. The lows were at 71.28. Look for a break of this range. Downside break gives us the fade opportunity. Now, it's not always going to be this clean, right? But typically, when you see a major upside stretch here that's traveled like the entire daily ATR in just a couple of minutes on a data print, it comes into a major resistance, automatically I jump really close into the charts, into the near term 1-minute chart even. Let's see if we can see some triggers. Does that make sense, Avery? I just want to make sure we're on the same page for that. Yes, Mike, thanks, exclamation point, right on, right on. So we'll see how far this one can go, but still looking good here on the Oz. Remember, guys, again, above that 70-77 level, you want to make sure that you be cautious about getting too aggressive on the shorts here. Now, those were the charts from yesterday's intraday update. Just want to go over a couple of radar charts, and then we will jump into your questions. Pietro says, I'm very new, but did well with the Aussie dollar yesterday. Very nice. And I took a small short position before it went down. But that short was pure luck. What was your trigger? What was the trigger you were expecting, just waiting to break the range? Yeah, so I was looking for a break of the range, Pietro, but not only that, I was looking for some sort of turnover in momentum. My rule of thumb is I typically will never, ever get into a position with momentum in overbought territory. All these guys who tell you that when momentum's overbought is when you sell, it's just simply not true. If that's going to be you'll luck out with it a couple times, but this can stay up here for an indefinite time period. And the longer this stays up here, this is when the market has the highest propensity for really making a run. Okay, I'll bring your attention just as a primary example, and this is something I always point out, dollar yen. This thing stayed in overbought condition for months, literally whole months. It stayed in overbought condition. And everyone who was trying to say, oh, this thing's overbought, they have to sell it, well, they had a pretty rough time, right? So it's the condition of breaking back below 70 that is the sell, right? But we always know that breaking below 70 in and of itself is not going to necessarily be the sell position, right? It needs to be coincided with something as well in price. And that's why we had a 70 break here. Price hadn't done anything. In fact, when we got that 70 price, it was still holding, just former swing lows. So in general, you look for the next opening range for the session to come up. London Open came, matched the same highs for the stretch that you made. You're still at resistance. You look for some sort of downside trigger, some sort of break of the initial opening range, and that would have been the tell. All of this, guys, all of this that I'm saying, and sometimes the market just rallies into a major critical resistance, and you'll want to just take a stab at it. You want to just take a lob. I can't advocate that kind of trading. I definitely don't want to encourage it, but I can just tell you sometimes you got to feel for it. If the market is coming to a major key resistance and it's a reaction to data, sometimes you'll just top tick it and you'll luck out like that. But from a strategy standpoint, to remain disciplined, to keep everything sort of structured in our thinking, these are the technical things you want to look for as far as a change. Also, divergence into the highs would have been a really nice tell. We didn't really get that, right? As soon as this thing maxed out into the highs, momentum just started melting lower. So let's say, Pietro, this had made another high at the stab, and the momentum had failed to make a new high. Then you're seeing near term, whoa. Momentum starting to get tired. We're at resistance. I have a short trigger. Let's fade this thing. All right. Make sense? Pietro says, oh, okay, thanks. I didn't know about the RSI 2. Yeah, this is RSI 2. This is just a basic add-on indicator you can get from fxcodebase.com. It will auto-scale the indicator for you and add those 40, 60 levels as well. All right. Pietro says, cool, right on. Great to have you in the room, man. John says, hey, Mike, do you simply use the RSI set at 20 as the trigger on RSI trendline breaks? Thanks. Yes, John. I think you're talking about the periods. Sometimes it'll be 14 periods, John. Sometimes it'll be 20. To be quite frank with you guys, it really depends on the pair. There's some periods that you'll look at, and again, the only way I do is I literally go back and forth to see which one gives you the cleanest 40. The cleanest 40 and 60 holds, the cleanest trigger breaks. A lot of times when there's excessive volatility, you want to stick to a 20 ATR because it'll smooth it out a little bit. When volatility starts to contract, a lot of times we'll go into a 14 ATR, which will, give you a little bit better of a picture of what's going on the near term. But just to tell, right? Just one other tool that we can use to help us graphically identify when we're seeing a break in momentum. And in fact, there was even a closer trigger than this. Right there. So Aussie was loaded with triggers. He just had to be up to be here to see the break, which unfortunately I wasn't. All right. Any questions on Aussie dollar? One other thing you might want to just tack on at this point, for those of you who are holding that short, I see a couple comments. Just take a quick retracement of the advance. 50 comes in at 70.85. Okay. Remember, 70.77 is going to be our near-term bullish invalidation level. A break back below 70.67, and that extension, it's a former 100% extension, I think, would shift the focus aggressively to the downside. I mean, if we do get that break, guys, there's risks a pretty big move here for the Aussie back on the short. Okay, we're getting some comments hitting the wires from the Fed's buller. It says Fed's goals have been met by some measures. It says prudent to edge Fed policy back towards normalization. Wants to return to 1984-2007 U.S. macroeconomic settings. 5% U.S. jobless rate is close to full employment. Fed's buller is making these remarks in text of a speech in Washington. So giving some lift to the dollar here. Continue to watch these hitting the wires, maybe fueling this a little bit higher, but Still coming in some near-term support for Aussie. Aussie turnaround fueled now by dollar comp. Yo, Eileen just said that. The print last night, so strong, and turnaround now seems as strong. So if we invalidate the opening range high for the week, and like I just said, if we break back below 70.65, that would be, yeah, that would invalidate the long side. But until that happens, momentum's still at 40. We're now testing it right now. We'll keep an eye on this. Who knows? That might actually even give us a decent long trigger if we head into US and this kind of settles out here. Let's see. All right. If price stretches to 75, Aussie dollar invalidates trying to sell a bounce in the short term. Mike, for me, if price stretches to 70.85 in Aussie dollar, it invalidates trying to sell a bounce. I mean, there's basic trend line there, Chris. Just basic trend line support. He says, okay, you just said it. All right. A little bit delayed in reading. He says exactly, looking for a long. Right. Yeah, I mean, if it settles there, I'd be looking for a nice position. Absolutely. Because momentum is still constructive. Momentum's still constructive. You're breaking above 70. You're looking for support at 40. We're right there. Price has support as well. Keep that in mind. All right. Yep. Chris, we're on the same exact page, man. I like where your head's at. Does sterling dollar have any trigger for the short yet? Has reached resistance level. So give me one moment, Avery. We'll jump into that as well. So this was Aussie dollar from yesterday's radar charts. Real quick, just wanted to touch base on dollar CAD. That's making a move here today as well. Here's what dollar CAD looks like on the daily. First of all, 133 was big. 133 was big. You still have this median line to contend with, but I'm starting to really just completely give up on the short side here. So the focus to start off the week was this channel. We talked about it yesterday. In fact, the interesting thing is that that channel slope is the exact same slope as the broader formation we've been in off the highs. I think I showed you guys this yesterday. So it's the same slope, right? So that same slope navigated this pullback here, looked like a bull flag, but the long story short, the focus was to the downside below 132.75. That broke. The invalidation level for the broader short trade is 133, 133.08. Look for support near term there now. Beyond here, you're looking for the August highs. 88.6 comes in at 133.85, and the high day close for the year comes in at 134.19. It's a tricky one, this CAD. It's a tricky one. You know, it just doesn't want to correct. So we'll be on the sidelines for this one here. I was looking forward. I really thought we were going to get a decent move here off a break of the weekly opening range, but it was just a slow dribble to the downside. We, excuse me, we highlighted in yesterday's report also that the momentum signature was 40, 60, 40, 60, 40, 60. That's as range bound as you get. You know, here was the inevitable break that took you above that 40 level, or 60 level rather, and the rest is history. So you might get a pullback into support at 133. Invalidation at this point for the long side is going to have to be 132.75, 132.76. It's a clean formation. If anything, it's still a clean formation to the upside here. Does that make sense, guys? On dollar CAD, Eileen says, this has helped to watch this single trade through. Quick moves and decisions, what to do with it, by the way. Cheers, Eileen. For sure. You know, if there are trades throughout the session, we'll track them. Let's see if we can get some triggers on this, actually, before we leave. Way too steep. Okay, no divergence yet. Okay. Yeah, we'll continue to track this one, Eileen. He says, haha, we're looking at the same thing. I'm looking for a long setup in the 1 minute now, Chris. Yeah, typically for the actual setup, I like to jump into the 1 minute just to get, a lot of times you can really, really get the best entry possible. It's the same concepts, though, that we do on the 30, on the daily. It's just granular, guys. So if anyone who's sort of new to the room, you're looking for triggers to coincide with a break or a test of a major key support or resistance in price. And when that happens, they can be really nice triggers to jump into a scalp, right? But at the end of the day, we have to remember that risk management is all that matters. And I don't care what trigger you're looking at or what level you're at, you got to make sure that your stop, if you can't put it that X amount away from entry, then you can't take the trade. And that's really what dictates at the end of the day whether we actually take the trade is if a quarter of the ATR is showing 20, can I put a stop 20 pips away with some sort of conviction? If I can't, doesn't matter, right? All right. I do want to keep going here. We're running late on time, so let me just jump through. That was dollar CAD from last night. Also from last night, sterling key. This was something highlighted earlier in the week. It broke the weekly opening range. Okay, and then came back and tested it as support. So I just wanted to highlight that the upside bias was still in play. You were constructive above 231.75. You really needed to break back below 230.30, 230.40 to get back on the bearish side. Upside targets were 233.10 and 234.13. We took out 233.10 already. Still looking for a rally into 234.13. But a perfect example, guys, of how you want to play these weekly opening ranges. Here's your Sunday open. You set a low. You set a high into late Sunday, early Tuesday, or late Monday, early Tuesday. You test that high again. Range is preserved. The break here, even if you don't get it on the upside break, which you rarely will, you look for the pullback to defend the opening range high. Just so happens that that opening range high and all that stuff took place at a beautiful Fibonacci confluence. 231.75, 231.70. So you're looking for upside triggers now while above that region. And we noted that yesterday, and that's exactly what you got. You actually got a decent upside trigger with this slope here on the near-term chart. So stop against the lows, much wider ATR. I tried to warn that earlier in the week. You're looking at 70 pips here, so just make sure you're keeping that in mind. But looks pretty good. Looks pretty good. Still want to stay constructive at this point while above 32.50, which is that median line, which also coincides with that 38.2 at this point. So still want to stay constructive above this region. I'm looking for a stretch to 234.13 to take the rest off. So another sterling or another Kiwi trade rather that looks very interesting here. We were tracking this earlier in the week. All the levels remain the same. So if you'd like to revisit the report from the 9th, you can get the details on that. Sterling Oz, Raj, yeah, here's what, or Sterling Yen and Sterling Oz. Let's take a look at both those for you. So Sterling Yen looks like this. By the way, dollar Swiss, I just wanted to show you guys this because it can be a tell. The dollar Swiss has actually been a really good barometer of base dollar movements. That's coming in some major resistance confluence as well. This is just a slope sliding parallel for the same type of, or the same ascent off the low. But more importantly, it completes a 50% extension off the advance. And just higher, you do have key resistance, which is the yearly high they made in March, and the 1618 off the low. That's basically like 101.40, 101.25. So just something to keep in mind here. I don't really want to trade this very, very tight ATR, but it does reflect the same type of picture that you're looking at with the dollar index, which is also flirting with that resistance. So just a note there. Where would your stop had been for the Sterling Kiwi long trigger early morning before the rest of the test and break? Sterling Kiwi. Before the rest of the test and break? What do you mean? So on this break, there's no trade. Like I said, 9 times out of 10, you won't take that. On this pullback on the long trigger, the stop is just against that low. You have 71 pips, so give yourself some room. You probably would have actually gotten stopped out on that one as well if you had that stop so close. But this upstretch rally is more than 70 pips, Eileen. Remember, this is really zoomed out to give you all the levels. This is quite a range. What is that? 231.70. This is 232.50. It's almost 80 pips. So just keep that in mind. The stop is typically going to be against the next session low or high, specifically if it's out the opening range. So this region has defined the opening range, was Friday's high, yada, yada. The stop would have been against the last swing low. Does that make sense? Eileen says, okay, I see it. Right on. Right on. And again, don't forget, Eileen, you're going to get the trigger on the upswing. So inherently, you're going to have a low to trade against. Listen, I'll eat stops of 10, 15 pips quite often. It sucks, but that's sometimes what I got to do. If I'm trading against a key level, I'll just throw it out there and see if the market catches. But keep in mind that you're typically taking the trigger on the rebound, so you already have a low to trade against. So as you're heading into this low, you're looking for the trigger on the way up. The trigger is against that same low that you just used to rebound off of. Same thing on the way here. You're not going to just sell at this support because it's there. The trigger won't be there on the way down. It'll be there on the way up. So once you get that 5-minute trigger, that 3-minute trigger, I mean, let me show you this, I guess, in real time. It will be probably a little bit more beneficial. Sterling key. So here's the trigger. Okay. You're coming into the lows. These are the lows that you made previously in the session. This was the Tokyo low. Here's London. You're at support, which is the opening range high for the week, so you're inherently looking for a rebound. You got the trigger break. That would be here, 31.85. Stop against 31.40, 31.45. Gives you a 40 pip stop. You're looking for 71. We're on our way. All right. She says, good. Yep. All right. Cool. So moving right along, that was the sterling CAD trade. I just wanted to go over that real quick. From the daily chart, or the sterling Kiwi trade, from the daily chart, you know, there really is risk for a little bit more of a mosh higher here, but generally looking for one last stretch to get back on the short side for sterling key, maybe near 235.12 to 235.13. Aussie Yen also made a breakout last night, obviously. We were following this one as well this week. Not really as keen on getting involved here now. Oops. Remember Aussie Yen, the premise of the trade was that we were looking lower while within this formation, the slope of which is the same exact. All these median lines have been offering really nice guidance. That invalidated the whole idea. Okay? We're coming back now, checking as support, very similar to what you're looking at, in Aussie dollar. So don't get faked out with everyone. You're coming in some interim support, both on Aussie Yen and Aussie dollar, which could offer a nice rebound back higher. Let's go back and just revisit the Aussie real quick. Yep. So we'll be on the lookout for some possible triggers there into US trade. Break in RSI for Aussie dollar 5 minutes, says Raj. I wouldn't call that a break yet. I want to see a break of this momentum here. You're probably looking at this, Raj, And the one thing I'll tell you about drawing triggers, guys, is try to avoid really steep angled 2-point triggers. The trigger here, Raj, I will agree with you that there is a trigger given out right now, but that's just the 30 break in and of itself. Now, price action hasn't really come into that major support I want. It's the 8:30 hour, so we'll see if we get one more stretch lower. But I do like a possible long scalp off this region for sure. For sure. Yeah, I don't like working with these kinds of triggers. They're just not, the efficacy is just not there. Sterling Oz, Raj asked before. Yeah, I won't leave the session without doing that for you as well. I haven't really looked at it today, Raj, but let's take a look together. Here's what Sterling Oz looks like on the daily. And okay, so it's still holding that resistance, 214.20, I guess 214 or 215.40, or 215.27, excuse me. A big region we've been watching for resistance. Looks like that sucker's still holding. Let's see what it looks like in the 30-minute. Okay, so these are actually the levels that we highlighted earlier in the week. I'm going to go ahead and adjust this now for the new high. Might throw off some of the levels. I'll tell you what I don't like about Sterling Oz here is that you're right back at the weekly open. This is going to be a doji on the week. If we were to close here, that is. Huh. I do like the wider ATR here. Here's what I would say on Sterling Oz, and this is I wrote a piece about this last week, I think, on Daily FX. I think my problem is that I'm bearish Sterling from a seasonality approach still. I think you could see that stretch higher. Here it is. The question is, do you want to fade this to the downside? I still think ultimately you'll see this thing move lower. In fact, the region of which we reversed from is pretty healthy. I showed you this on the daily chart just a moment ago. This is a pretty big region of resistance and a major pivot for price over the last 4 months. Catching the highs, lows, lows, highs, false break. Here we are turning again. It's just that momentum is above 50 on the daily chart. So you don't have that conviction for the breakdown just yet. I'd be looking to sell rallies. I don't necessarily have a conviction bias for you here, Raj, but personally, yeah, I'd be looking for a rally to sell. I don't know if I'd stress that formation that I drew here just yet, but the momentum signature turning around, if you see a 60 hold in momentum and a trigger around these levels, it actually be pretty decent to try to get short back around the weekly open here. 60-minute in 30-minute, 60 hold in a 30-minute chart. Yeah, 60-minute or a 60 hold, excuse me, in a 30-minute. You're absolutely right. So the 30 minutes, typically when you have a really strong uptrend, you want to see support around 40. You want to see momentum turn ahead of 40, and that's what you've been getting all week long. This breakdown broke 40. So now on the opposite side of the trade, you want to see resistance at 60. So look for momentum to hold 60 here into the US Open. We're into the Open now, 5 minutes here. Guys, if you get a downside trigger against that level, you might be in for a decent scalp. Wider range, 55 pips. The levels have been all right, but the major break would be back at 212.35 again. That was a nice confluence region. And you've seen, obviously, some major pivots there as well. All right, Raj. Not the cleanest setup, man. I wouldn't say it's my favorite setup, but that's my 2 cents on it for what it's worth at this point. Sterling Yen, we didn't touch on, guys. I am over on time. I do got to run, but I just wanted to give you a quick overview on that here. Here's what Sterling Yen looks like on the 30-minute chart. We've been tracking this one all week long. The break back above the weekly opening range, we talked this yesterday, tagged that final support at 186.95. We saw that pullback hold within these median lines. Do you see how crazy this thing has continued to respect this slope? So while the upside stretch missed the target, 87.56, it turned at 87.50. It missed it by like 6 pips, whatever. Very aggravating. But the break back below the momentum, this was actually a short trigger. Okay, against the highs, you'd be looking for 87 and 86.60. You got both of those. Broadly stays constructive. Broadly stays constructive here near term. All right, still think you could possibly get that stretch into 187, but looking higher on the immediate focus for a better sell entry on Sterling Yen. Raj, you're talking about this pair right here? No, I'm looking for a rally to sell. We noted that in the report on Monday. The rally extended way more than we thought after we got this hold back above 186. We abandoned the idea of the short side, right? We talked about this in the webinar yesterday. I'm still favoring the broader short trade, but near term, the rally has potential of still reaching back into that 87.80 level if we get another stretch here. The invalidation level on a closed basis, and this is what I told you guys yesterday, is still going to be the high day. What is that level? The high day close from September. So you can see how many times we tried through this. If we close today above it, you're definitely at risk. But intraday, I'm going to be looking for this thing to sort of teeter out here on Sterling Yen. All right, I got to wrap it up there. We're way over on time. Guys, I want to wish you the best of luck. Have a great weekend. We'll pick things back up on Monday. Don't forget, we have the public webinars on Daily FX. Tuesday, Wednesday, and Thursday, we'll be back here on SB at 8:30 Eastern. Remember, also next week, we will also have the IDO search platform walkthrough. I invite you all to attend. Jamie will be doing a quick overview or an in-depth overview, rather, of the IDO search platform and really get into the metrics of how we can use it more appropriately as traders and implement it into our strategy. So I definitely recommend all of you guys make time for that. That'll be at 2:30 Eastern on Wednesday after the midweek strategy webinar. All right, guys, best of luck trading. Great weekend. I'll see you next week. Cheers.